global markets are on edge as tensions in the Middle East continue to escalate, with Donald Trump setting a high-stakes deadline that has investors watching every move closely. Oil prices are climbing sharply, while major U.S. indexes like the S&P 500 and Dow Jones Industrial Average are slipping modestly, reflecting uncertainty rather than outright panic. Despite intense rhetoric from both sides, markets are showing surprising resilience, holding relatively steady as diplomatic efforts remain underway. On POP, we're breaking down how this unfolding situation is not just a geopolitical story, but a financial one that could directly impact global economies and everyday consumers. The biggest movement is being seen in the energy sector, where oil markets are reacting quickly to the ongoing situation around the Strait of Hormuz, one of the world's most critical oil transit routes. Benchmark U.S. crude has surged past $115 per barrel, while Brent crude remains elevated compared to pre-conflict levels. The concern is clear. Any prolonged disruption in supply could keep energy prices high and fuel a new wave of global inflation. Still, investors are holding back from drastic moves as negotiations continue behind the scenes, leaving markets in a tense wait-and-see mode. Meanwhile, uncertainty continues to dominate investor sentiment as mixed signals emerge from both political and economic fronts. Donald Trump has issued strong warnings in recent days, but has also delayed major actions in the past, leaving room for a possible last-minute shift. That unpredictability is keeping markets from making any decisive moves. Analysts at Wells Fargo Investment Institute note that investors are likely to remain cautious until a clear outcome emerges, whether it's a diplomatic breakthrough, further escalation, or a measured response. Until then, volatility is expected to linger, with traders closely monitoring every development. Across global markets, reactions remain mixed as investors balance risk with opportunity. European indexes are showing modest movement, while Asian markets, including gains in South Korea's benchmark, are holding relatively firm. At the same time, bond markets are steady, with U.S. Treasury yields staying elevated compared to pre-conflict levels, a sign that borrowing costs for households and businesses could remain high. For now, all eyes are on the outcome of the deadline and whether tensions ease or intensify. On POP, we'll continue tracking every major development as this high-stakes situation unfolds, with potential ripple effects across economies worldwide.